Hi guys, this is Trader B, and in this video I want to show you how it's possible to forecast all market turns in advance on any liquid market. That includes commodities, futures, forex, stocks, and even Bitcoin. And this is based on principles that I learned from WD Gann over the last 10 years. So let's have a look. All right, so this is the chart of the Canadian dollar, the USD CAD Forex pair for the year 2019. So starting in 2019, I've got a bunch of data for this specific instrument. And in a few minutes, I'm going to jump to the actual charts to show you how I got these turning points. But for now, I want you to pay close attention to where I've got the turning points highlighted. So starting at the very top, we've got a sell signal here. We're coming into a buy signal here. We've got another sell signal, buy signal, sell, buy, sell, buy, and on and on. And we're pretty much catching all the major pivots. And the cool thing is, I knew about these turning points before the market ever got there. In fact, I knew about these turning dates at the beginning of the year because that's when I sat down and I did the calculations for the entire year of 2019. Now, some of you may be thinking that this is impossible to know in advance, and that's exactly what I used to think. But Gann was famous for calling out market turns just like these all the time. And it's literally taken me forever to figure it out. And you might be skeptical about this, but for a second, if this was possible, how would your trading improve? If you knew these pivot points in advance, would you have a higher win rate? Yes. Would you have bigger winners? Yes. Would you be more confident to let your profit run? Of course. And the good news is I've managed to figure this out for myself, and so can you. And I'm going to show you how in this video. And before we continue, if you've never been exposed to WD Gann before, this is going to sound completely crazy, but bear with me here because I was the biggest skeptic ever as well. And if you're a Gann trader or you're on your journey to figure him out, this is going to be really, really insightful. Okay, so before we continue, let's quickly learn about the master himself. I'll probably make another video detailing a lot more about him later, but just a few points about him now. So his name was WD Gann. He's commonly referred to WD Gann, and his full name is William Delbert Gann. He was born in 1878. He passed away in 1955, and he's reported to be one of the most successful traders that has ever lived. And if we look at some of the available broker records for his trading, it's estimated that he had made over $50 million in his trading career. And that's in the early to mid 1900s. And that money converted to today's dollar is around $500 million. That's $500 million. And that's just absolutely crazy for a single man to have accomplished a feat like this. Because we have people bragging today for the fact that they caught like a couple of points on the ES. Now, if there was a retail trader today known to have made this much money, would you not be curious to learn more about his trading techniques, especially if he was teaching them? I know there's a lot of controversy about his trading, but I'm going to prove to you that Gann had deep knowledge and he was a trading master. Because if he was known to have a winning ratio of up to 92%, and I can get very close to that number in my trading, and so can other Gann traders, there's definitely truth to what he was teaching and he was doing. And it's up to you to prove it to yourself if you wish to do so. Okay, so when I was skimming through Gann materials, I came across one of his quotes, and it triggered my curiosity. And the quote reads, "I discovered that the law of vibration, this mysterious thing, enabled me to accurately determine the exact points to which stocks or commodities, or any other instruments for that fact, should rise and fall within a given time." So exact points rise and fall within a given time. We're looking for exact points to rise and fall within a given time period. Time is at the bottom here. And so when I came across this quote, I was like intrigued. I'm like, what the heck is this law of vibration? And how is it so accurate and precise? And so when you're studying Gann, and on the other side, you've got a moving average system or support and resistance or some kind of divergence system, this stuff really captures your attention. So I was struggling as a trader, and I was doing a lot of research into different techniques, and I came across Gann's material. And Gann was known to have made a lot of money. And that's the thing that really kind of hooked me into his approach. And his materials referred to a lot of esoteric concepts like astrology, numerology, and a lot of other things, which I figured was his edge. And an edge is an edge. Nobody's laughing when you're making money, right? So, and if you're like me at first glance, you're thinking this is just a big joke. And how the hell do stars millions of miles away affect the markets? This is just like a whole bunch of like BS. But because I was struggling and I was just kind of doing my research, I was very curious to see what he had to offer. So I started reading his material. And I came across the supply and demand letter that you see on your right. This is a letter that was published by W.D. Gann Scientific Services, so by W.D. Gann, who's the president of this company. And it was published in 1928, on the 23rd of November of 1928. It was published for the year of 1929. And essentially what this letter is doing, it's forecasting the entire year to come. And it's got all these pivot points here. And when I came across this, I'm just like completely like baffled. I'm like, what is going on? How is this guy predicting the future? What he's doing is for the Dow Jones, from these 30 stocks, he's predicting what the forecast will be for the year. And I'm just completely like, there's no way. What the hell is this? It's not like forecasting the weather, which is simple, observable science. But this is an entire year worth of very specific forecasts. On the x-axis here, we have time. And on the y-axis, we're not measuring price, but we're just measuring moves in comparison to each other. So it's just a scale to measure moves in respect to each other. And I don't want to get into the too much details about the letter here. Maybe we'll talk more about it later. But what was important is when I started studying this letter, I was hooked. And I was like, if there is a way to do this, I just have to figure it out. I have to know how, because this is what do you call it? I just needed to know what kind of variables would go behind something like this. Like, where do you even begin? And I know a lot of hedge funds and quants have forecasting models, but this was something completely different. So I started studying Gann and I gave it a shot. Okay, so a little bit about myself before we jump to the actual charts. My pen name is B. It's simply the initials of my first name. And I've been trading for over a decade now, and it's taken me a very, very long time to become profitable. I have a background in math and finance, so it just took me forever to deal with my intellectual limitations, mostly programmed by school. And also because I innately had a great desire to be very accurate, which led to analysis paralysis. I was just looking at so many things, so many ways to forecast the market and look at future trends and all that kind of stuff. I was just paralyzed. I did not know what to do or how to approach the market. I was just looking at too many things, too many indicators. And I couldn't see myself trading a 40% winning system, even though it eventually would be profitable. Even though the numbers made sense on paper, I just couldn't come to terms with trading a system that was only like 50%, 40% profitable. And I guess I'm not that wired that way because of my schooling and all that stuff, but I would much rather a very high percent win rate. So that's kind of what I was going for, even though there's nothing wrong with having a low percentage win, even though, because ultimately it's about making money. Because if you look at, there's some great examples about traders and people who've made a lot of money with a small winning system, like the turtle traders, but that style is just not for me. And it became especially difficult the more I studied Gann's work, because I was chasing an elusive thing called perfection. Because if Gann was able to get like a strike rate or a win rate of 92% without computers, I could certainly do better, right? That was my premise. I'm like, if he could do it 92% without computers, I could probably figure it out as well. But initially, for the first 3 years, when I came across his material, I'm like, you know what? I don't think this is true. I denied it. It just did not seem conceivable to me that it was possible. Nonetheless, a part of me still wanted to do more research, because I just wanted to see what it was all about. Even though initially it was too much for me to swallow, because it makes you question everything. How can you possibly forecast the future so precisely, right? And if it was possible, what does that mean about world events? Governments, interest rates, trade, export, geopolitics, war. Anyways, that's for another time. So eventually I just came around to it, and I realized, you know what, I was going to figure this out, and I'm going to do what it takes. And eventually I just came around. I spent around $50,000 in the first couple of years on signals, seminars, books, indicators, like a lot of people, just trying to figure out what it was. It's not the wisest thing looking back, but that's what I did. And it's literally taken me a decade to figure out this Gann system, almost like a full 10-year cycle. Ultimately, I had to do the work to figure it out. And because the knowledge is not out there, it's not written in books, it's not just presented to you, you have to do the work to figure it out. It's just way too valuable to be floating around on the internet or anywhere else. Okay, so how do you study Gann? It's very simple. You read all of his books, then you focus your efforts on Tunnel Through the Air, which is said to be the most important book on financial markets. It's not easy, obviously, it's not easy, but your first priority has to be to figure out the time cycles. If you figure out the timing equation, everything else will make sense. Everything else is going to fall into place. And then you can start figuring out the wheels of price and the deeper use of square root of 9 and the geometry and everything else. Everything else only makes sense when you have the time cycles. And knowing this fact alone will save you a lot of time, because otherwise you'll gravitate towards the easy stuff, the square root of 9, the Gann angles. And it's very frustrating to make them work consistently because you're not going about figuring them out the correct way. And if you don't have the I'll do whatever it takes to figure this out mentality, maybe it's not wise to spend the time or money involved, because this does not come easy to anyone. And I know a lot of guys who have been studying Gann for much longer than I have, and they can't even tell you the basics of the system that I'm about to show you. And also, it's important to note Gann had multiple strategies, and this is key because when I was initially figuring out reading his books, I could not make sense of all the contradictory messages that were coming to me, and I just thought it was one big system. But there's multiple systems, and we'll look at that as well on the charts. Okay, why is it so difficult to figure out Gann? Why are most people not able to get to the bottom of it? The reason why it's so difficult is because, first of all, it takes a very open-minded person to even be able to grasp his ideas. In fact, they're mocked and ridiculed in our society, right? The second thing is there's no clear path to studying Gann. There's no step-by-step tutorial. And a lot of the people who claim to be Gann gurus, unfortunately, don't have it solved for themselves. So they can't really teach it to you either. They'll teach you some parts, but most of them aren't very useful if you're looking for the whole picture or if you're trying to replicate Gann's results. And so you don't know where to begin your studying or how to go about doing it. And the other reason is because the material you have from Gann is so cryptic. It's not easy to decode. And hence, it takes endless amount of patience to just figure it out. It's just very cryptic. It takes a lot of brain power, and it's just very difficult if you don't know what you're doing. And when you do figure out, okay, this is how I need to study it, and this is what's required, you come to learn that you must study several different fields of knowledge. And that takes a lot of time. And you don't know that at the beginning, because you have to piece this knowledge together one by one. And because it's so cryptic, it takes endless amounts of patience. Literally putting a decade into anything, you need to be truly dedicated to see this through. And since that's a huge weakness for a lot of traders, you start seeking out some kind of magic formula, like a secret formula. And that's just human nature. And I can assure you there's no such thing out there. There's just no such thing. Some version of square of 9's out there and the Gann angles, but that's not the key. Ultimately, if you're going to figure this out, you're going to have to do the work. But because most people just end up quitting on this because it's just too resource intensive. A lot of people just end up giving on trying to figure out Gann. So the key is all about time. And nobody wants you to know these secrets. Anyways, let's look at the charts to see how we can start figuring out Gann's system. Okay, so I've got, just give me a second. I need to get my charts all lined up. Sorry, I just need to minimize this. Okay, so this is a chart of the US dollar, the one I showed you earlier. And starting in the year 2019, we're going up to the year 2020. So we're going to look at about a year's worth of data. So the first thing you want to understand is that Gann had multiple strategies. And in this video, I'm only focusing in on one of them. And that's the one I use in my personal trading. So the first thing to note is that Gann had 3 strategies. The first strategy is what we would call the position trading strategy. And second is what we would call swing trading. And the third one is the intraday trading method. Okay, so, and I'll give you quick examples of what this entails. So first, Gann's position trading strategy. That is Gann. That's when Gann is looking for the major reversals on the weekly and monthly time frame. So what that looks like is you're looking to catch these pivots. And essentially what you want to do is, once you have these dates, from this high to this low, you're looking for sells all the way down. And from this low to this high, you're looking for reasons to enter the market and go long. And you're looking for reasons to go short from here to here, and you're looking for reasons to go long from here to here. So if we jumped on the daily chart, what that looks like is as follows. Oh, it's loading. It's a bit slow. Let's see. Okay, so we are, from this point onwards, we're looking for shorts. From here, we are looking for longs. From here, we are looking for shorts. From here, we're looking for longs. And so this is part of his longer term strategy where he would pyramid into his positions. So if we're at the beginning here, all we know is that we have another turning point coming up after a certain amount of time. And what we would end up doing is we would find reasons to go short all the way down. We're looking for multiple entries every time we get some kind of retracement or some kind of supply and demand or whatever method you have to enter the market. We're looking for shorts and we're going for shorts. And when we come here, now we're looking for reasons to go long. And so something simple would be if, and obviously this is not what he would do, but this is for me to give you an idea. Moving average, and I'm just going to take any random number. I don't trade with these numbers. It's just to give you an idea, to smoothen it out. Maybe the 200 might be even better, but essentially what you would do in a strategy like this is every time the market dips below the line, you want to buy, maybe at a fib or something like that, and you're looking to get long all the way through because you have the longer term cycles. And vice versa. Every time you have a short, from here to here, you're looking for reasons to go short. This would be a 30% retracement. This is a 51. This is another 30. This is another 618, and you're shorting all the way down. So from here to here, that's like a 31. That's close to a 50. That's definitely a 31.8. That's another 618. And you're looking for reasons to go short. So that's the long-term strategy if you have the long-term cycles. And these are my examples. These are not the way Gann would trade these. These are my explanation of what I understand of his cycles. So that's the position trading strategy. But in this video, I'm going to focus on the swing trading strategy. So let's have a look at that. Let me just quickly get these off the chart. Okay. There's got to be a faster way. There is a faster way. We'll move on. There you go. Okay, so the second strategy is, we're looking at 2019. The second strategy is what I'm talking about today, is the swing trading strategy. And that's the thing that caught my attention. It's the ability to call out all the highs and the lows in the market. And it goes from, you want to call out this high, then you want to catch this pivot, then you want to catch this high, you want to catch this pivot, you want to catch this high, and this high. And the cool thing is you want to know this in advance before the market ever gets there. And I'll show you how you can do that in a few moments. So that's his second strategy, the swing trading strategy. And you can keep doing that across the chart, of course. And the third strategy is his intraday strategy. And that's what he's famously known for. That's when he took the 286 trades in October 1909, and he made it to the ticker and investment digest. And he was popularized for his trading methods. So let's look at the swing trading strategy where we're catching all the major pivots going throughout the chart. And I'm going to make this look really easy. And trust me, there's a lot of work that goes behind something like this. All right, let's get the chart set up and let's look at this. I'm going to explain what is necessary for you to understand what I'm about to do, but I'm not explaining everything. Okay, so what I want to show you in this video is how you can catch every major reversal in this market. And before I can show you how you can do that, there's a few things you need to understand. The first thing you need to understand is the concept of orb, and that's lost energy. Second thing you need to understand is the concept of inversions, and that's expecting the opposite. And I'll give you an example. And the third thing is you want to fight the need for 100% accuracy. Okay, let's have a look at these. Okay, so concept of orb. Concept of orb means technically when we're doing these studies, we want to catch the exact pivots. So the exact high, the exact low, the exact high, and exact low. And in theory, that's what happens. But because of the concept of orb or lost energy, what ends up happening is half the time you'll catch the exact pivot, but the other half you'll catch the day before or the day after. So here you may catch the day before, here you may catch the day after, here you may catch the day before, and here you may catch the day after. And that's totally fine. The signal is equally accurate. And then you have to use your chart reading skills and your trading skills to translate that signal into a trade. Okay, the second thing that you need to understand is the concept of inversions. And that simply means if you're expecting the market to go up, you get a down signal, and vice versa. So what do I mean by that? So after a long run up, you would want the signal to tell you, hey, we are looking for a short, right? It wouldn't make too much sense if at the top here you get another signal and it says, hey, the market should be going further up. That just seems out of place. And vice versa, after a long drop, it looks like, you know what, after this, it's the end of the world, the market's crashing. You'll get a signal here that the market should go further down. And again, that doesn't make too much sense because you would intuitively expect a long signal there, right? And that would make a lot more sense. Hey, we should go long. Obviously, you don't know that beforehand, but since we're analyzing the past, I could show this to you. So the concept of an inversion is very simple. It means that after a long run down, when you're expecting an up move, you actually get a down move, and vice versa, right? And the cool thing is you can figure this out beforehand if you understand the cycles. And obviously there's a lot more to the system that we simply can't cover in this introductory video, but you can confirm the validity of these cycles with another dominant cycle. And that's what we're coming to now. And the last thing is, before I start sharing some of this method, the last thing is you want to fight the need for 100% accuracy. Even though it's theoretically possible to be 100% accurate, and there are rare unicorns out there who do have 100% trade rate, it's very, very impractical to do that. It makes much more sense to do that perhaps for an intellectual challenge, but a 90 to 92, 95% is more than enough to make an abundant amount of wealth trading. So those three concepts should give you a good understanding of what I'm about to share. So before I can start drawing, I need to share another concept. And that's how I get the data to call out these turns. So I've got an Excel sheet here. And basically, it's for the USD CAD, which is the chart we're looking at. And what I'm doing here is for all the market dates, I've got the date lined up in the first column. Then I've got the open, high, low, close data for those specific dates, and I'll have this filled out. So for example, if we look at this date here, this is the 31st of May. And you know what, let me look at the beginning of the year. So 31st, first is probably markets closed. So we're looking at the first day of the year was the 2nd of January 2019. And we want to get the open, high, close, open, high, low, close for that day. So the open is here, the high is there, the low is at the very bottom, and the close of the bar is right there. And the data, you could get that from here, open, high, low, and close. And what I did is for this specific bar, if you look at the open, it's 1.3646, the high is 1.3662, the low is 1.3569, and the close is 1.3576. And I've got that right here. So what you want to do is for all the days of the year, you want to go populate the data here. So you have the market data. And obviously you don't have to do this manually. You could go buy this data and you can download it from multiple sites for free and some for paid as well. So that's the first thing you need to do. And the second thing you need to do is then be able to plot the cycles that affect the markets. And obviously this is the knowledge that you gain from WD Gann. So from my perspective, going through his material, I found close to over 325,000 cycles. And my way of approaching Gann's work is from a mathematical perspective. I'm just looking at all the numbers available. And so each cycle is just a bunch of numbers. And this is connected to the geometry of a circle and square and a lot of other things. But again, for the data side of things, again, it's a completely different video. There's a lot of detail that you need to go through to understand what this is. But the base idea, the core idea is this. There are over 325,000 cycles. And you want to figure out the dominant cycles that affect this specific market. And in this case, it's the USD CAD, right? And so we start off with 325,000 cycles. And we get the market data, we get the open, high, low, close. Now we're looking at these cycles, and we want to narrow it down to the top 100 cycles. And then we want to use the techniques that we learned from Gann to narrow it down to the top 100 cycles. And from the 100 cycles, we're going to do a lot of testing using key principles to narrow it down to the top 3. And this could take weeks, months, and if you're not doing it right, you don't know about the principles or the guidelines, this could take you years to figure out. So out of 325,000 cycles, you want to find the top 3. The first one will give you the position trading cycle, so the long-term trends. Cycle 2 will give you the swing trading turn points. And cycle 3 will give you the intraday turn points. And once you know how to do this, you could actually start doing it really, really fast. But because I'm coming from a mathematical perspective, I like to get all the possibilities on the table and then narrow it down. But there's a very smart way of narrowing it down, so you could get to the top 100 and then I'll apply a few base principles, and so you can get it down to maybe 30 or 40, and then it's a bunch of testing to get these dates. So ultimately, once you have all this market data and you have all of this cycle data figured out, you want to find the pattern that runs through these cycle numbers. So where does this data come from? I am looking at chart data. I'm looking at market data. I'm looking at astronomical astronomical data. I'm looking at astrological data. I am looking at a numbering system. I am looking at mathematical data. And I am looking for a few other things and some patterns. Ultimately, I am looking for a governing number that dominates this market. Each market has at least 3 dominant cycles, if not more, and I'm looking to find the most dominant one for this specific market. And once you have the dominant cycles, you're looking for a specific pattern, and the pattern will tell you when all the turns are coming. Once you have the pattern, you've got it for life. And that is priceless. Literally, you cannot put a price on figuring this out. Once you do have it figured out, it will make you a fortune. It's only a matter of time. So let's go back to the charts. Let's have a look at this. Okay, so we want to find the market vibration, and I've spoken about the data. So now what I want to do is I want to show you how you would go about doing this. And again, I'm going to try to get all this data on the chart. So that's what we have, and I am going to plot the arrows. Kind of like these arrows better than the other ones. It's easier on my eyes. Okay, so what are we looking at now? So I've told you that there's 3 main strategies, and we are focusing on the second strategy, which is the swing trading strategy. And then I showed you on the Excel sheet that we have the market data, we have astronomical, astrological, we have a numbering system, we have mathematical sequences, and we have a few other things. And combined, we're going to look at all that data from the top 100 down to the top 3, and we're looking for a key pattern. We're looking for a number that's going to govern that market. And for this market, I'm just going to give it away. We are looking for the number 0.21. Okay. And what we're going to do is, so I've got a standard calculator here from my computer, and I've got another calculator here that I've built based on this Excel sheet. Obviously, I've got a complete Excel sheet in my computer. This is just for demo purposes. And this data here is coming from that Excel sheet. And what we're looking to do is, actually before that, so the first column, I've got the dates. I've got the dates from running from left to right, obviously from the history to the present. So we're going to start with 2019, 1st January of 2019 onwards. So the days are increasing, the time is increasing as we go down. The second column here I've got blurred out because I've got some formulas and some things that you don't need to know about right now, but we'll definitely talk about that in the future. And in the column 3 is where we are looking for the repeating pattern that we found through all of that data. Again, you need to know how to do this right. Once you figure it out, you've got it for life, and otherwise it'll take you forever to kind of narrow it down. It's almost impossible to just get it through mathematics, but again, I don't want to get into too much details. Let's look at the numbers 21. So essentially what we're doing is we're going to go down, and we are looking for the number 21, and we're going to look for the repetition of the number 21 in multiples. So if I start off with 0.21 here, the next cycle will be at 0.42, which is 2 times this number, and the third one will be at 0.63, which is 3 times this cycle, and on and on and on. So let's have a look. We are starting at the very high here, okay? And that is the 31st of December, and that's where I have my calculator set to begin. So we're looking for the first number 0.21. So let's scroll down here, and let's look for the number 21. So whether that number is positive or negative does not matter for now. There's a reason why it is positive or negative, and we'll cover that later. But for now, we're just looking for the number 21 and increments of that numbers. Okay, so let's get back to it. 0.21, the first number occurs on the January 1st, the number occurs on 2019, January the 11th. So we're going to go to January 11th, and you can look at the dates right at the bottom here. We're looking for January the 11th, and that is the first bar right here. So what I'm going to do is I'm going to make a copy of this. I am going to go to January 11th, and that's our first signal. So the next signal will be adding the cycle number by itself. And now we're looking at 0.42. So let's scroll down to number 0.42. Hey, so that's on the January 22nd of 2019. So January 22nd, that is right here. January 22nd, 2019. Now we're looking for another increment. That's 0.63. 0.63 is February 2nd. So that's February 1st. That's February 4th, which means February 2nd occurs over a weekend. If it happens on a Saturday, I usually pull the cycle date back to a Friday. If it occurs on a Sunday, I typically push it out to Monday. So in this case, it's going to be pulled a day before. It's going to be right here. So I am going to bring that back here. Now, before I continue this, I want you to hold, just pay attention to what we're doing here. We are essentially going from left to right. I don't know where the market is or is going to be. I just know the next date where the cycle is going to turn. So if I was to enter a trade here, I am just waiting for the next cycle date to hit to go the opposite direction. The cycle date hits, and now we start going into the second direction. The cycle date hits, now we're expecting it to go the second direction. So what I'm going to do is I'm going to do this for the entire chart. And you can forward through this if you're watching this video, but I'm going to do it for just to show you I'm actually getting these numbers from somewhere. I'm not just making this up. So let's do that now. So we were at 0.63. Next one is 0.84. 0.84 is at 213. So I'm going to bring this down here and that down here. I'll make a few copies. Do this live so it's easier for you to see what's going on. 0.84 is on 213. We are looking for 213. So that's right here. Then we're looking for the number 105. That's 224. It's right here. Then we're looking for 126. That's 307. 307. That's a beautiful move. Then we'll look for 147, 318 right there, 168, 329, 329, beautiful. Slightly faster for me to complete this. Okay, so where are we? We are 168 was here on 29th of March. That's right here. So the next one is 189. 189 is 409. Catching the short-term low there. 2-1. 2-1 is right there. 2-4 April 20th is right here. You can get it right there. That's probably a first inversion. 321. Is 616. Nope. I got that wrong. We were at 420. 2.10. So we're gonna start the calculator. 0.21 plus itself. We have 2.1. The next one is 231. There we go. 231 is 501. There's 501. One more time, 252. It's between these two numbers, 511. 511 is right there. 273. 522. Catching that beautifully. 294. 602. 602. So that's 31st, 2nd. So we move it to the next day, probably on Monday, right there. That's beautiful. 294 and 3. 6:15. That's on 6:13. 6:13. Catching that there. Let's move this over for a little bit. 3:15. 3:36. That's on 6:24. 6:24. That's right there. Okay. And then 3:36. We have that. 3:57. That is 7:05. July 5th. Right there. That's beautiful. It's 3:78. 7:16. 7:16. 3:99. That's 7:27. 7:20. 7:26. That's right there. That's 4:20. That's 8:07. 8:07. Catching that top right there. Beautiful. 4:41. That's 8:18. So that's right there. 4:62. 4:62 is 8:29. 8:29 is right there. 4:83. Times 9:09. 9:09. That's beautiful. 5:04. That's 9:20. 9:20. Catching that there. Okay, we're going to down here. Okay, 5:25. Let me speed this up. 5:25 is 10:01. 10:01. Right there. Yeah, there we go. Then we're catching 5:46. That's 10:11. 10:11. Catching the beginning of that drop. 5:67. It's 10:22. 10:23. 10:22. 10:23. So it's between these. Put it right here. 5:88. That's 11:02. 11:02. That's right here. Okay, 6:09. That's 11:13. 13. Right there. And 6:30. Almost done. It's 11:24. 24. It's right there. 6:51. It's 25. That's right there. And then we have the last one. 6:72. It's 12:16. 12:16. I believe that's the last one for the year. So we'll stop there. Okay, so let's blow this up. And so if you're not impressed right now, seeing what you're seeing on your screen, it's unreal. Like when I see this, the fact that I am looking at all this data from elsewhere and being able to plot this, and again, I was able to get these moves way before the market even begins, right? I could sit down, do these calculations into the future, and I can do it into the past. So if I run these numbers backwards, I can figure out all these pivot points into the past. And if I keep doing this into the future, I will know where the future trend dates are. Okay, so a couple of things here. Let me kind of blow it up to show you to explain a few things. Okay, so first of all, you have to admit this is impressive, okay? I'm not making this stuff up. This is some real advanced forecasting knowledge. All we have to do is, well, I'm oversimplifying this. Once you find the pattern, all you have to do is you just have to run it through time and you can figure these stuff out. If you look at this, there's a couple of things. Okay, so we have the number figured out. We have the dating calculators all set. So all we have to do is keep running these calculators. The other thing you have to keep in mind is we're working on the law of periodicity, which means we're going to go from a top to a bottom to a top to a bottom to a top to a bottom. And so let's see where that didn't happen. Wherever it didn't happen is where an inversion has occurred. And again, if you run the numbers beforehand, you can figure out where the inversions are about to come. So let's quickly highlight some of the inversions. So we've got that here. All right, so that's kind of everything. I'm gonna, for the sake of our exercise, I'm just gonna highlight where the inversions occurred. So beautiful. Actually, you know what? Let's mark this out. This is a beautiful move. Beautiful, beautiful, beautiful. We've got our first inversion. And for the sake of our exercise, we're going to assume we did trade this, but we lost. If you know how to run the cycles, you will know how to calculate these inversions in advance. And also because this is one cycle, when you run the other dominant cycles, they will confirm these moves and the polarity. And that's key. And that will give you confidence to trade these. Okay, but for for the sake of our exercise, let's just say that this was a loss. So let's keep continuing here. Okay, so here, this is not necessarily an inversion, but it depends on your trading system to see whether or not you made money on this, whether or not you made money here. Because if you have multiple profit targets, you probably would have caught part of this move, and this signal did work, but it just didn't work according to the strategies. I'll show you how I trade these in a few minutes, but let me just finish connecting the dots here. So maybe you got a partial here. Maybe not, depends on your cycles, and more importantly, depends on your trading knowledge. So again, here, for the sake of this exercise, we'll say this is a loss. We're not going to count that as an inversion that you knew beforehand. We're going to keep going. Beautiful. Some of these trades are just monsters. Okay, again, let's highlight that as a loss, not an inversion. If you're an advanced cycle trader, if you understand time cycles, you should be able to pinpoint these beforehand and trade them profitably as well. Okay, there we go. We have 3 inversions for last year. Actually, I'm gonna fix that. That was a much bigger move. Okay, we have 3 inversions. So let's see how many trades came in. So we have our calculator. We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 26, 27, 28, 29, 30, 31, 32, 33. We have, I counted 33 signals, and we have lost 1, 2, and 3 signals. So we have 30 over 33, and we're looking at a 91% win rate if all you did was trade signal to signal. If that's not impressive, I don't know what is. I'm looking at this and I'm like, oh my god, this is just like unreal. There's no way this stuff was true. I still look at this today and I'm like, you know what, this makes completely no sense. But hey, I'm doing this in front of you. It's taken me just like a huge chunk of my life to figure it out, and I'm here to share it with you, to inspire you and help you along on your journey. So let's look at how you would trade this. The first method you would trade this is from signal to signal. So from here, okay, so you're coming into the cycle date. You have this date figured out beforehand from the calculator. Remember the calculator that I was showing you previously here in the corner? That is not connected to market data. Just keep that in mind. So all I have to do is scroll into the future calendar dates, and see when that 0.21 is coming. And so you'll have this future mapped out. So you come into this state, it's a signal, it's a short signal. If you do the work beforehand, you can know in advance if it's an inversion or not. But again, we'll leave that up to how skilled you are as a forecaster and a trader and all that good stuff. So you come into this state, boom, you're looking, you find a reason to go short, and you're in this monster move. And then you come into the second signal, the second trade signal, you want to go long. You would close this trade, you would find a reason to get long, and you would start going up. Come here, you're looking for another short, you find a reason to jump into the chart. Boom, you make money, you're going up, and on and on. So let's look at a quick risk to reward here. Now, if you took this trade and you knew what you were doing, you're looking at a 13-to-1 risk to reward ratio. There is nothing else out there who can consistently give you monster moves like this. You're risking 34 pips. You're low for a potential of 450 pips. You trade that on a 10 lot. You're up just under $50,000. There's nothing else that can give you this kind of stuff. And I have studied everything out there. I'm telling you, there's nothing else like this out there. So this is totally worth your time. How do I minimize this? Let's move there. Anyways, the first way to trade this is, again, signal from signal. The signal dates are coming in. You go short, it comes in. You go long, you go short, you go long, and that's how you do. That's how you would trade it as a first strategy. And this is what I do in one of my accounts where I trade all the swing trading. And then on a second strategy, which I do on a separate account, is you can trade the smaller turns. So if you went down to, for example, a 4-hour chart. And this is what it would look like if you're forecasting the future. And this might remind you of something else we saw earlier. This is what you want the charts to look like. Well, that's how your forecast looks like beforehand, like this, until the market comes and confirms your cycles, which is completely spooky. And you have to train your mind to be able to trade like this. Okay, so the other way is any other strategy that you're trading, you can start to catch the intraday trades for this. So for example, if we're coming into this short right here, you can use your support and resistance lines, you can use supply and demand, you can use whatever else technique that's working for you now, but you can confirm it using the power of the cycles. For example, if we were trading this signal, let's see what we have to our left. We don't have any supply and demand, any support and resistance, but we do have a supply and demand zone. So we have a supply and demand zone right here. And if you don't know how to trade supply and demand, you have no idea what I'm doing. But those of you that do, we would take a short from here, right from the edge. We would take it from here. We'd have our short stop loss right there. And our first take profit would be this point here. We've got all the highs and lows coming up here. Oh, I think the data just refreshed. Okay. Your first target would be here, and your second target would be somewhere down there. And so, in that fashion, you can use the power of these time cycles to trade any other system that's working for you as well. Trend lines, trend channels, support and resistance, and everything else works beautifully once you're working in the direction of the trend. All right, so let's look at a few more things before I wrap this video up. Let's see how much money was possible, how much money was on the table. So if we look at the pricing tool, I think it's down here, price. So I'm just going to take the average from somewhere here based on your entry to approximately this area. We've got 410 pips there. We've got another 110 pips there. We've got 250 pips there. We've got 126 depending on your strategy. We've got another 100-ish there. And we've got 300 there. And that's still March, January, March. Let's end the first quarter. Okay, let's end it somewhere here. Okay, so if you are trading a one lot, let's see how much money was on the table. We are looking at $4,000, 4,100 approximately. approximately here. We are looking at 100. Obviously, these are rough guesses. A lot of this has to do with your trading skill as well. Forecasting and trading are two different things. We'll talk about that in a second. This is about 2,500 bucks here. We're looking at about 12. Another 150. Okay, and we are just run that up to 300. That's 3,000. That's another. Just run that up to 1,500. Okay, so if you're trading one lot, you have made, that's 4, 5, 6, 7.5. 8, 750, 9, 10, 13, 14, 15. That's approximately $15,000. That's approximately $15,000. It's closer to 14.6. But on a one lot, you're making $15,000 over the course of 3 months. And even though that's beautiful and that's more than what most people make at work, but the idea is when you have the power of time cycles on your side, you want to actually be able to trade a lot more and a lot more with confidence. So if you were trading 10 lots, that's $150,000 that you're looking at over the course of 3 months. And that is absolutely crazy. And that's why you want to figure out these time cycles. And lastly, that's crazy, 150,000 over 3 months, right? That's potential. And it comes down to whether or not you have the ability to trade this. And the last thing is, if you want to go aggressive, and I haven't done this yet, but I'm testing to do this. If you were to start off, say, with $10,000 and you would add a contract every time you made $5,000. So you start here with $10,000 and you're up 4,000 approximately, you're up $5,000 here. So you're up to $15,000 and you add a contract. So from here to here, you're up two times 2470, about $5,000. So you're up here 15. By here, you're up 20, and you're now trading 3 contracts. 20 and 3 contracts, you're up $23,000. And another 3 contracts, you're up $26,000. You add a contract, so it's 4 contracts. 4 times 12 is 4 times 3 is 12. So 26 and 12 is 26 and 12 is $38,000, and you're adding more contracts and you're compounding. But that's when Gann did some of his campaigns and he was aggressive and he was multiplying accounts. That's what you're doing. But you can only do that if you have, when these time cycles are coming in, and you have the ability to be that aggressive because that where the market is heading. So at the end of the day, it depends on how much knowledge you have about these time cycles and how much understanding you have and your trading skills and a few other things. So once you start trading this way, it almost feels wrong, right? Because it seems like you know something that nobody else does. And that's because you do know something that less than 1% of traders know worldwide. And it literally, you're jumping leap and bounds in your trading. And so, for example, so if you wanted to continue trading this, you're like, hey, that's great. We analyzed the past, let's look at the future. What would that look like? I'm going to skip right to the end, jump back onto the daily chart. And it would look something like this. This is live market action where we are on January the 20th, just at the beginning of the day. It's Monday today. So what's going to happen is very simple. I would keep going into my calculator and figuring out where 0.21 keeps happening. It's probably happened somewhere down here. I'll put my calculator away. And then the sell signal, all I would know is when the sell signal is coming. Say it's January 27th. So I'm going to draw a line. And I am now waiting for that day to happen. I am waiting for price to cruise around, do what it needs to do, and kind of do what it does, come here, and then I'm looking to sell the market. And then once I get here, then I can plot the next line. And well, I could do that now, but that's what the next line would look like. And at that time, I am looking to buy, and then I am looking to sell somewhere down here. And that's the power of time cycles. How would your trading improve? if you had this knowledge. I'm telling you, it's like nothing else. Okay, that's all I have to show here. Let's jump back to the presentation and wrap things up. Okay, we have done that. Okay, so the difference between forecasting and trading. Forecasting is what I showed you. It's the ability to figure out where the markets are going and when they're going to turn. That's figuring out the turns, but you still have to trade the signals. You still have to have good risk management and trade management, and you have to have your psychology right. You have to rewire your psychology, in fact, to be able to trade like this, because it's very different than what most people are used to. And probably the most important thing with trading like this is you have to be patient. And why would you want to do all of this? And I can assure you, all the big boys, George Soros, Paul Tudor Jones, the Warren Buffetts of the world, they know and use these strategies in their trading. And that's the only reason you want to, and it's probably the only reason you want to spend your time trying to figure this out and learning this and doing what it takes, because you're in this game for the long run and you want to play large. Someday you want to be able to play with 10 lots, 20 lots, 50 lots, and 100 lots. Ultimately, it's so you can have the freedom that you deserve and to give the lifestyle you want to your family. Okay. So you might be curious what I've made using these strategies, and surprisingly, I've made a humble amount so far. There's two reasons for that. One is last year was my first year trading with these strategies. I have been trading for a couple of years using other strategies, but last year was the first one where I started applying these, and these are my results from last year. And the other thing is I am still very risk aware when it comes to trading. Even though I know the time, I have the power of the time cycles on my side, and I know when they're coming, I'm still very hesitant. I need to build my muscle to trade with these accounts. Just because you know these dates doesn't mean you can start dropping 100 lots and just, go out there and make a killing. You have to work yourself to that point. You have to raise your vibration to that point. So capital preservation is key. You have to keep that in mind. So last year in my swing trading account, I've got two trading accounts. In my swing trading account, I was up 162 and change. So about $163,000. That's money in the bank before tax. And in my day trading account, where I do some of the shorter term trades, I was up just over 93,000. Again, that's money in the bank before tax. And this may be a lot to some of you, but it's not why I spent a decade doing what I do. My next goal is to figure out how I can start making $1 million a year at a very minimum. If you're using WD Gann's core teaching techniques, you should be able to be a 7-figure, 8-figure, 9-figure trader. It's just a matter of time. So that's my goal. I want to push myself to the $1 million. And once I'm comfortable doing that, I'm going to create an account where I can be more aggressive and push even further. And the way I plan on doing this is this year I'm going to be adding more markets to the mix, to my portfolio, so I can get a few more trades. And then when I have enough trading experience with this approach, I'll likely be, like I said, I'm going to be opening an account where I could trade aggressively and not impact my long-term trading and investing accounts and my short-term day trading accounts as well. But yeah, I'd love to make a video in the future where I'm trading 100 lots in front of you and show you what the power of these time cycles are, and motivate you guys to see what retail traders can do and have done in the past. It's just that a lot of this information is just not out there, and you really have to spend a lot of time trying to figure it out. And and something I'm aspiring towards myself. That was my goal. When I started, I wanted, I don't know how or where I got this idea, but I was like, you know what, I'm going to be a 100 lot trader. So that's where I'm headed towards. That's my personal trading aspiration. Because if we jump back to the charts, if you catch one of these bad boys, I'm not going to catch the first one, but say this, you're looking at 247 pips. That's $250,000 in one move. That's ridiculous, and that's exactly where I'm headed, and that's where I want to go. So, anyways, let's see. I'm almost done here. Next steps, if you want to learn this, I highly recommend that you do. There's nothing else like this. And if you know this is possible, how much would you pay to learn something like this? Would you pay $25,000? Would you pay $50,000? Would you pay $100,000? Is it worth spending some time to trying to figure this out? And the answer is hell yeah. So the fastest way to figure this out is to find yourself a mentor. It's nearly impossible to figure this out yourself. Trust me, I've tried, and it's just not possible. And there's no magic bullets. You're gonna have to put in the work to figure out these time cycles. It does take a lot of prep work. You're front loading all the work, so by the time you get to the charts, it looks like you're just plotting a couple of arrows on the screen, but it's a lot of work that goes behind the scenes to get to that point. And when you do start working on this, you want to focus on time. You got to figure that out first. And if you want more information, check out my website. For more information, you can sign up to my newsletter where I put out more content. And I try to put out as much as I can. That's it. I hope you enjoyed this video. Smash that like button, subscribe to stay updated to my future videos. I've got another one coming up pretty soon. Leave a comment with any questions you have, and I'll try my best to answer and get back to you all. And I'll see you in the next video. Thanks for watching.